Good night.
Good night.
Hope everybody had a chance to read. Oh, we started chapter 5 anyhow before we closed last week. So we'll give them like 10 more minutes for others to join. Good night. Good night.
Good night.
I just said to give 10 more minutes so others who haven't come as yet. Okay, good night. Majority of you are here, so did everyone receive the review sheet?
Yes, ma'am, I did.
Okay. Mona?
Yes, I did.
The one for midterm?
Yes, ma'am.
Yes, ma'am.
Okay. Did y'all have a chance to finish going over chapter 5 because we started it? Hello? Hello? Did y'all have a chance to go over chapter 5?
No,
Yes,
I
ma'am.
wasn't able to go over.
Okay. Anyway, like I said before, chapter 5 is for most of you work in the bank, and for those who don't and you actually read the chapter, it's straight, quite straightforward. Okay. Anyone remember where we left off in chapter 5?
No, ma'am.
So I
No.
think we talked about on page, well, everything is labeled page 5. When we were talking about what is banking, what is the meaning of a banker, and we talk about the illustration with the deposit where the customer, Mary, deposited her money and got 1%, but the bank loaned John the money and for a mortgage loan and charged him 6%. So the bank gained 5% from Mary's money when Mary didn't gain anything. She just got a 1%, but the bank used her money to lend for a mortgage. And we said that the customer, John, he got the mortgage for 30 years. We said that it was 300,000. The loan equals 15,000 in interest per year. So it shows you that, and like I said before, a bank might make their money for giving loans and getting interest from the loans. And most of the time, well, all of the time when a bank give a mortgage loan, for the first couple years, the majority of your money actually goes to the interest. If you have a 15-year term mortgage, you probably in 7, 8 years, you'll see money really, your principal really decreasing. And like I always said, the way to beat the interest is by putting money to the principal. So if your mortgage payment is, say, $1,000 a month, and you're able to at least put half of that to the principal monthly, you're really knocking down the principal. So the interest will drop. You won't pay as much interest every month. The more you pay to the principal, the more you decrease your interest, which you'll be paying the bank every month. We also talk about a bank is a dealer in a capital, or more properly, a dealer in money. He is the immediate part between the borrower and the lender. He borrows from one party and lends to another, which we just talked about, getting a deposit, because a deposit from a customer is not the bank owned, it's a customer. So the bank is just borrowing the money from the customer to give a loan. So that's what the bank does. You'd hear, like I said before, you hear sometimes the bank will say, oh, we need money. So they have campaigns where staff would go out and try to bring in deposit accounts. And then, like I said before, you have some banks who are so liquid that they never have to go out there and get deposits, because they have enough liquidity, so they don't ever have to really um, advertise or do campaigns. Because like you say, you see a lot of times with mortgage, you hardly ever see deposits, banks advertising that, oh, we're paying this rate on deposit. Anytime you see a campaign, most of the time the campaign is actually talking about switch your mortgage, and we'll pay your administration fees, we'll do this or we'll do that, and this is the rate. We have a competitive rate. So if you're paying 8% at one bank, and say you're paying 8% at a Royal Bank, and Scotiabank say, okay, we'll charge you 5% if you switch, and these are the what you would get with it. So they say you get a credit card with a certain amount of limit. We'll pay your administration fees. We'll pay half of your legal fees and stuff like that. So they make it quite interesting for you to want to switch from an 8% mortgage loan to a 4 or 5% mortgage loan. Banker has been defined as accepting for the purpose of lending or investment of deposits of money for public, repayable on demand, or otherwise withdrawal by checks, draft, money order, or otherwise. Like we know, people have checking account, we have savings account. People can write a check, do a withdrawal, money order, or otherwise. Personal bankers. Most bank branch office has a personal banker. A personal banker. Mona, can you tell me what a personal banker is all about in your own words?
Smith, I'm still trying to get home, but okay.
Okay.
A personal banking representative. Well, in Fidelity, that means a loan officer.
Mhm.
I guess somebody that takes a personal interest in the client. Or I'd say if you need that particular person, someone you can call on to any time of the night, I guess, or any time of the day, and they'll assist you. Because you're moving it from just being a regular customer service rep to somebody personal. So if you're categorizing it as personal, meaning that I should be able to reach you anytime, since you're my personal assistant.
Agreed. And also, with being a personal banker, there may be other services that the client need, like say a checking account, a term deposit. They just
Correct.
need actual information. Their savings or checking needs outside of actually the basic teller needs. So they would say to you
Correct.
probably, what is the bank paying on a checking account? Or is there any checking account with where interest is paid, or a checking account is non-interest payment?
Non-interest.
So right. So customers sometimes ask those questions, and this is the reason why even though sometimes CSRs may say, oh, I have to refer. I feel CSRs, persons working in the bank from the ambassador, should be able to give customers some kind of information, not say, I don't know. And even if you don't know, you shouldn't tell the customer, I don't know. You should say, hold on one second, I will refer. But you have some
But that also comes with
CSRs.
experience.
Agreed. But like I say, when you join the bank, for example, Fidelity, I know you do 101, banking 101. So these are the things that you should learn in those classes. But is that still going on? They still do banking 101? Because I know that and they get orientation. So banking 101 introduced them to certain, beginning aspect of how the bank is run. So, and then too, as being a representative of any institution, you should take it as your own interest, as wanting to know more, so you're able to help customers. Maybe when a personal banker or is busy, instead of having to have the customer on hold, you should know some information that actually help the customer. Sometimes customers just need, basic information, and you'll have CSRs, ambassadors who can't even give you that information. So here again, like I say, it all falls back to persons taking initiative and wanting to learn, because the brochures and everything are there to say, these are the services we offer, this is the rates we pay, this is what you have to deposit. So, it's taking an interest on your own, representing the company that you work for.
I agree with you.
Commercial bankers. Commercial bankers service institutional clients in the community with their financing need. And we know commercial banking, a lot of times you'd see like a First Caribbean, a Royal Bank, they really come because they do they would give loans for big constructions. Like you'd see them giving loan to build say help with the airport. They're giving loan to to build big buildings. So a lot of times when persons do an investment, they would go to those type of bank to say, I'm building this house or I'm building this business and I need a commercial loan. So they will get a commercial loan mostly at those commercial banks, because a bank like Fidelity or a bank like Finco, I'm not sure, but I think Finco, because they're part of Royal, they probably venture out there giving a bigger loan. But I still think Fidelity does the same. I'm not sure with the commercial part of it, but I know Fidelity do big loans too. And other banks like Commonwealth, they all do. But when it comes to the commercial bank, you'll have like hotels and stuff, go into those commercial banks to get money. Investment bankers, as we know, investment bankers, like we have a Royal Fidelity, we have a CFAL, all of these, and no longer we just have bankers, because you have like persons like at CFAL, you have persons at Family Guardian, you have persons at Leno. All of these are they do investment. We call them investment officers, or but in the banks we said investment bankers. And we have like a lot of we have security brokers, we have junior, senior security brokers. So investment companies really deal with really raising capital. Say for instance, like the port. Remember when our they're doing that was doing that, they brought it to the market, and it was either Helena Financial, CFAL, or RF. I can't remember who bought the initial funding public offering to the market. But just like I say, with Commonwealth Brewery, all of those were brought to the market where people had opportunity to purchase in the company. So investment bankers really deal a lot with mutual funds, investing of customers' money, to get higher returns. And like I said before, if you want higher returns, you have to take higher risks. If you don't mind the returns and you just moderate, then you take low risks. And with low risk, you get lower returns. With higher risk, you get higher returns. Merchant bankers, sometimes the bank itself would provide the capital a private company needs, but not as a loan. It may be an investment by the bank in the company or the project itself. This is the role of the merchant banker, similar to private equity. Many of the investments are in the private sector, not publicly traded, and are often real estate transactions. The merchant banking division of a firm means long-term personal investment. In other words, the firm uses its own capital and select accredited clients. Merchant bankers also provide traditional advisory service and capital raising without an investment, often providing intermediately throughout the stage of company or project life, known as Messini financing. I've never heard that. Let's see what that means. For example, the bank might invest in a struggling company, turn it around, and then publicly trade it. What is IPO? Anyone? I just said it. Initial public offering. So they invest in a company that really going downhill. They turn the company around, and then they put it on the market as a public offering. And like we know, they put a certain amount, and when they get at their max, they stop trading. They stop taking offers. Any questions, any concerns about what I just talked about?
No, ma'am.
Hello? Okay.
No, ma'am.
No, ma'am.
What is a bank customer? What is a bank customer? Natasha?
Good night.
Good
A
night.
bank customer would be someone who holds an account with the bank. I
Mhm.
guess whether they have a savings or a loan or something within the bank, they have a relationship with the bank.
Yeah. Mhm. And it says a bank customer is someone who has an account with the bank or who is in such a relationship with the bank that the relationship of the bank customer exists. The legal position implies that opening an account in a critical is the critical element in establishing a bank customer relation. And like with anything, bank customer relation, like Mona said, a person, like with a personal banker, you should be able to contact your personal banker. Your personal banker should always be available to you. And when you build a relationship with your customer, and like I say, customers want to feel wanted because all banks offer the same products. Customer wants to feel wanted. So the service you render to them what keeps them with your bank. If you offer poor service, well, nobody wants poor service, and no matter what business you're in, poor service is not good for the company. The term customer has not been defined by an act. The word customer has been derived from the word custom, which means a habit or a tendency to do certain things in a regular or a particular manner. The Negotiable Instrument Act states when a banker receives payment of a cross check in good faith and without negligence for a customer, the bank does not incur any liability to the true owner of the check. When a check is crossed, what does a customer have to do when they go to the bank with that cross check? Can they get funds from that cross check? Or what do they have to do?
No, that's for deposit only, eh?
Yes. Yes. So a lot of times people don't understand it. And you see most government checks, if you get checks from government, if they're paying you something like persons, they owe persons for land or just services or whatever, a lot of times they would cross the check. So you cannot just go and cash it. You have to deposit the check to your account. And then depositing the check to your account, you have to wait for the check to clear. So that's another thing. Yeah. Okay. It's obviously mean that to become to become a customer, account relationship is must. Account relationship is contractual relationship. It is generally believed that an individual or an organization which conducts banking transaction with a bank is the customer of the bank. However, there are many persons who do utilize service of a bank but do not maintain an account with the bank. Can I come at a Scotia Bank and get US funds to travel abroad, Natasha?
I'm not sure because I'm not in the branch, so
Okay.
I can't answer that. And I never
Mm,
tried it, so at least I have an account, so I
yeah,
still couldn't
Mona.
answer that.
Mona, can I come at Fidelity and I'm not a customer and get US cash for travel?
No, ma'am.
No. So I think most banks now you have to be a customer for them to give you cash, US cash. But like I think the commercial banks, like say I'm traveling to Canada and I need to buy some Canadian dollars, I think I should be able to go to Royal Bank or First Caribbean or Scotia because only so many banks offer services like that deals with Canadian, well, really deals with more foreign currencies. Thus, bank customer can be categorized in four broad categories as under those main account relationship with a bank: existing customer, those who had an account relationship with the bank, former customer, those who did not maintain any account relationship with the bank, but frequently visit branches. I think now, Muna, because I know I cannot come and cash a Fidelity customer check there, can I? Or that's
What do you mean? What do you
discontinued?
mean? What do you mean you cannot cash Fidelity customer check there?
Okay, say for me, a customer of Fidelity gave me a check.
Correct.
Can I
You can
come there and
cash it.
cash that check? Pardon me?
Yes, you can. Yes, you can. You're
They
referring to
didn't.
the non-Fidelity checks. Non-Fidelity checks, we
Okay,
don't cash
but
them
I
unless
can.
you have an account with us.
Okay,
But
so
if
if
you
I
have an
come,
account with us, you can deposit it. And
right,
it
but I
takes
can't
between 3
cash
days
it.
to clear out. Yeah, you could cash it as a Fidelity check. As long as you have a relationship with us, you can. Now, if you don't
But
have an
suppose
account,
I don't. This is what I'm talking about. If I don't have a relationship with the bank, I
no,
can't,
so
right?
then, no, you have to
I have to
deposit on
deposit
your
in my
account.
account
Mhm,
somewhere where I have an account.
correct.
But what happens if I don't have an account anywhere, but the
I don't
person
know.
give me a check?
I don't know. I've never, well, they've never had that situation. So I don't know.
Okay. Okay.
I think the check, the person on the account who issued the check,
Uh-huh.
I think they'll probably have to come in and cash it. I remember having a situation like that before.
Okay.
Yeah.
Okay.
The account holder could come in and I guess change it to their name
Change it
and cash it
or
against
just
their
withdraw the
account.
money. Okay.
Yes,
All
ma'am.
right. Branch. Okay. Those who do not maintain any account relationship with the bank, but frequently visit the branch or bank for availing banking facilities such as purchasing drafts or cashing checks, etc. Technically, they are not customers as they do not maintain any accounts with the bank. Prospective potential customers, those who intend to have an account relationship with the bank. A person will be deemed to be a customer even if he had only handed over the account opening form duly filled in and signed by him to the bank, and the bank has accepted 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 it for opening an account, even though no account has actually been opened by the bank in its book or record. So as long as I take the buying forms and I sign it and pass it back, and I promise to return to bring the money to open this account, so the bank have my forms, but I reach back yet to open the account. Mona, have you ever experienced something like that where a customer bring in all the forms but has never come back to actually put the dollar value?
Sorry, I was passing the police just now. I didn't know pick up the phone. Repeat the question for me, please.
I say, have you ever had a situation where a customer filled out all the forms, you all accept the forms, and they were to come back because, okay, now a lot of customers don't know you need that $500 to open an account with Fidelity. So they be like, I come with $100. So you say to them, okay, yeah, the forms are duly filled out, properly completed, but oh, you need $500 to open the account. So the customer says, okay, I'll be back next week to open the account with the $500. Have you ever had a situation where a customer never came back?
No, because I don't open accounts.
Well, do you know of any
I've never heard of
situation?
it.
Okay.
I know I've heard of a situation whereas a customer hit the news and then the account she had with us, they
Mm-hmm.
closed it out and she had to come and collect a check.
Oh, okay.
But I've never had that incident.
Okay. Banker customer relationship. Banking is a trust-based relationship. There are numerous kinds of relationship between the bank and the customer. The relationship between a banker and a customer depends on the type of transaction. Thus, the relationship is based on a contract and on certain terms and conditions. These relationships confer certain rights, obligations, both on the part of the banker and on the customer. However, the personal relationship between the bank the bank and its customer is the long-lasting relationship. Some banks even say that they have generation to generation banking relationship with their customer. The banker-customer relations is fiduciary relationship. The terms and condition governing the relationship is not to be leaked by the banker to a third party. Have any one of you ever had a situation where you knew someone, or say a friend, and they said to you, hey, so and so, they have a bank account with y'all, or they have a mortgage with y'all? Have y'all ever had persons trying to get you to leak information to them about someone that they know?
Yeah.
All the time.
I remember I had a situation when I worked at another bank, and it was a friend of the family, and they say, oh, you used to work the bank? Girl, so and so, because they work at a bank. And so they say, so and so owe us, and so this, and they like, oh, I need you to tell me how much money they have. And I was like, what? I said, no, I cannot do that. You believe that person stopped speaking to me? I don't think up to today they speak to me. I'm like, no, that's customer bank relationship privacy. No, I cannot do that. I could get in trouble for that. So you just have to not talk to me. But that you work at a bank and you know I can't do that. So why are you asking me to do that? So people will do that. And for a lot of persons, and that's why I say here again, banking 101 should deal to let when persons come on. That's the first thing I think companies should instill in their workers: customer relation, privacy, certain things. And I know when you first join the company, you have to sign all these documents to say you cannot do those stuff. So for someone to ask you to leak information that does not relate to them, is your name on that account? I don't think so. That's your husband? Oh, okay. What you want to know? Oh, sorry. Let me check. Your name there? Your name ain't there. I'm sorry. There's no information that I can give you. You need to go to him for whatever information you need. But a lot of people don't do that. People still is go leaking the people's business. Do you think you should be out there discussing a client's relationship with your bank with someone who don't have isn't on the account with that client?
No.
Do you know, and do you think people usually do?
Yeah, you have some people that do that
Yeah,
and
Yes,
don't
ma'am. I
realize
surely
they could
do.
be costing themselves that job.
yeah. Yeah, because you know when Ralph they come, somebody can say, oh yes, if it's the husband, and girl, you know your husband have a credit card. And yes, girl. What you mean he have a credit card? Yeah, girl, he have a credit card. Oh yeah. Oh, girl, he's coming to bank and pay this credit card for Mary. What you mean he's all kind of information. And when Ralph they come, it'd be like, well, Andrea tell me that. What? Mm, person gone to the bank. Oh, Andrea's working. Oh, but she gone and tell my wife this, tell my wife that. All kind of confusion. Lose your job for what? Divulging information that you know you shouldn't have. You know, you signed that bank secrecy um, clause, but you still out there divulging information. I still gonna go tell somebody information that don't have nothing to do with them. Yeah, and a lot of people do it. Like we say, women especially when they trying to find some information on, say, their husband. Okay, my husband have this with your bank, but he ain't saying nothing to me. Oh, check and see if he have that credit card. Yeah. And then you have some people, I know of a situation where a lady found that her husband was paying a credit card for another lady, for a lady. And at the end of the day, you don't think the lady gone in the bank? She gone in the bank, carry the credit, she find all the credit card slips and approached, and the person worked at the bank too, and approached the person and say, oh, how is it? You give my husband a loan, and then I find that he paying your credit card, with your credit card's receipt with him paying doing in my house. And so it's a whole lot of things, and people get themselves in a whole lot of situation. But like we know, buying customer relationship is privacy. That's why they say banking is a trust-based relationship. Okay, Miss Roberts, can you read debtor and creditor for me, please?
Sure. General relationship, debtor and creditor. When a customer opens an account with a bank, he fills and signs the account opening form. By signing the form, he enters into an agreement or contract with the bank. When customer deposits money in his account, the bank becomes a debtor and the customer, hold on, sorry. When customer deposits money in his account, the bank becomes a debtor of the customer and customer a creditor. The money so deposited by customer becomes bank's property and bank has a right to use the money as it likes. The bank is not bound to inform the depositor the manner of the utilization of funds deposited by him. Bank does not give any security to the depositor, that is, debtor. The bank has borrowed money and it is only when the depositor demands banker pays. Bank's position is quite different from normal debtors. Banker
Right,
does
like
not
we
pay
know,
money.
1 second, Ms. Robert, like we know, like I said before, the bank gets your deposit, and at the end of the day, they're free to do what they want to do with your deposit, as long as when you come and you say, hey, I have an emergency, I have that term deposit with $600,000 on it, but you know, I have an emergency, I need my money. So the bank has to ensure that they have enough liquidity to be able to pay their debt. So, because customers could come at any time and ask for their money back. And what you have to do, you have to pay them. You have to, on demand, they say on demand, I need my money, you know. So you have to have the money. Go ahead, Ms. Roberts.
Banker does not pay money on its own, as banker is not required to repay the debt voluntarily. The demand is to be made at the branch where the account exists and in a proper manner and during working days and working hours. The debtor has to follow the terms and conditions of bank said to have been mentioned in the account opening form. Though the terms and conditions are not mentioned in the account opening form, but the account opening form contains a declaration that the terms and conditions have been read and understood or has been explained. In fact, the terms and conditions are mentioned in the passbook, which is issued to the customer only after the account has been opened.
Well, we know we don't have passbook anymore, but we know because we don't read the fine prints, the open account form could say one thing, and we come back and we say, well, I didn't, you never told me that. And like I say, a lot of times bankers do not explain to customers some, you know, you don't have to go through the whole form, but explain certain key points to the customer to know that, okay, this is the term and condition. Okay, you open this ASU savings, you can't withdraw from it. And if you do, you have to pay this fee. A lot of times customers don't even pay attention to that. So they come, they open the savings and the ASU savings, and it's supposed to be, well, I know example at Fidelity, 6 months, I believe you could just continue. And then after that you can withdraw, but people don't do that. They come, and after 2 months, they be like, hey, I need my money. So they just come and they expect to get interest and, you know, get the interest off it, and they closing it out before time, and then they expect not to pay a fee. Mona, is the fee still $25 or it gone up? If somebody close out, well, I'm not sure, you know. Huh?
The ASU savings,
Yeah,
if you close it up before the maturity date,
yeah,
well, now it's $27.50 because the 10%
right, because the
only dropped
body.
from 12 to 10.
Yeah, okay, yeah, okay,
Yeah.
yeah. Because when I was there, I know it was 25. When I used to deal with knowing about it, yeah, it was 25. All right, you can continue, Miss Roberts.
In the past, while opening accounts, some of the banks had the practice of giving a printed handbill containing the terms and conditions of account along with the account opening form. This practice has since been discontinued. For convenience and information of prospective customers, a few banks have uploaded the account opening form, terms and conditions for opening account, rate charge in respect of various services provided by the bank, etc., on their website.
Thanks, Miss Roberts. Miss Strawn, can you read creditor and debtor for me, please?
Yes. Lending money is the most important activities of a bank. The resources mobilized by banks are utilized for lending operations. Customer who borrows money from bank owns money to the bank. In the case of any loan, owes money to the bank. Sorry. In
Right.
case of any loan advances account, the banker is the creditor and the customer is the debtor. The relationship in the first case, when a person deposits money with the bank, reverses when he borrows money from the bank. Borrower executes documents and offers security to the bank before utilizing the credit facility. In addition to opening of a deposit loan account, banks provide a variety of services which makes the relationship more wide and complex. Depending upon the type of services rendered and the nature of transactions, the banker acts as a bailey, trustee, principal agent, lessor, custodian, etc.
Continue.
Special relationships, banks as a trustee. A trust is an obligation annexed to the ownership of property and arising out of the confidence reposed in and accepted by the owner, or declared and accepted by him for the benefit of another, or another and the owner. Thus, trustee is the holder of property on behalf of a beneficiary. A trustee is bound to deal with the trust property as carefully as a man of ordinary prudence would deal with such property if it were his own, and in the absence of a contract to the contrary, a trustee so dealing is not responsible for the loss, destruction, or deterioration of the trust property. A trustee has a right to reimbursement of expenses. In case of trust, banker-customer relationship is a special contract. When a person entrusts valuable items with another person with an intention that such items would be returned on demand to the keeper, the relationship becomes a trustee and trustee. Customers keep certain valuables or securities with the bank for safekeeping or deposits certain money for a specific purpose. Escrow accounts. The banker in such cases act as a trustee. Banks charge fee for safekeeping valuables.
Okay, thanks, Ms. Strawn. When they talk about escrow, as we know, like I know with mortgage accounts, some banks have an escrow where every month money you put a certain amount of money aside for your mortgage payment, and then you also put a certain amount of money to your escrow account to cover your, whether it be real property tax, whether it be life insurance, whether it be house insurance. So the bank would incorporate all of these into your loan payment. But if your loan payment is, say, is $800, and then you have to pay an extra for your life insurance, your house insurance, and your real property tax, all of this, those amounts are put into an escrow account. So if your insurance is due, say, for your house insurance is due every year, so in June, that amount would have accumulated on your account, because you know the first year you have to actually pay for your house insurance, your house insurance up front. We know real property tax will come after that year. So at that point, and your life insurance, well, that can be something that is added every month because life insurance is due every month. But real property tax is on an annual basis. So they would say, okay, this is your real property tax divided by 12, and this is what they take to put in the escrow account for your real property tax. After that 1 year for your house insurance, now you pay the first year upfront. So then they'll start saying, okay, this is the amount we have to put aside for your house insurance. So every month the money goes there along with your mortgage payment, but this amount is separated and goes into an escrow account. And when either the house insurance or the real property tax is due, the money, they automatically takes it out, send a check to real property tax, pays your house insurance. Mona, are you home? Can you read the Bailey Bailiff for me, please?
Okay. Defines bailment, bailer, and bailee. A bailment is the delivery of goods by one person to another for some purpose. Upon a contract that they shall, when the purpose is accomplished, be returned or otherwise disposed of according to the directions of the person delivering them. The person delivering the goods is called the bailer. The person to whom they are delivered is called the bailee. Banks secure their advances by obtaining tangible securities, in some cases physical possessions of securities goods pledged, valuables, bonds, etc. are taken. While taking physical possession of securities, the bank becomes bailee and the customer bailer. Banks also keeps articles, valuables, securities, etc. of its customers in safe custody and acts as a bailee. As a bailee, the bank is required to take care of the goods bailed. Principal and agent.
Mhm.
Principal and agent. The special relationship between the customer and the banker is that of the principal and the agent. The customer, open bracket, principal, close bracket, deposits checks, drafts, dividends for collection with the bank. He also gives written instructions to the bank to purchase securities, pay insurance premium, installments of loans, etc. on his behalf. When the bank performs such agency services, he becomes an agent of his customer.
Mhm.
Pawn and pawning.
Okay. Mhm.
Pawn and pawning. When a customer pledges goods and documents as security for an advance, he then becomes pawner. Open brackets, pleasure, close bracket, and the bank becomes the pawnee. Open bracket, pledgee, close bracket. The pledged goods are to be returned intact to the pawner after the debt is repaid by him.
Any questions and concerns over what we've read? Because I'm sure you'll see a lot of them in the review question. Any questions? Any concerns? Miss Sutherland, you could read the mortgagee relations for me, please.
Mortgage is the transfer of an interest in specific immovable property for the purpose of securing the payment of money advanced or to be advanced by way of loan. When a customer pledges a specific immovable property with the bank as security for advance, the customer becomes mortgager and banker is the mortgagee. Rights and duties of the customer towards the banker. The main rights and duties of a customer towards the banker, in brief, are as under. The rights of a customer. A customer who has deposited money can draw a check on his account up to the extent of his credit balance or according to overdrawing limit sanctioned by the bank. The
Okay.
customer,
1 second, miss. Okay. Customers make deposits, and as we know, you can get secured overdraft facility or unsecured overdraft facility. Now, when a bank allows a customer to have unsecured overdraft facility, they're taking the risk, because if you have something that is unsecured and the customer decide that, okay, you give me a limit of say $5,000, but it's unsecure. So I could write up a check up to $5,000 without you returning my check, because you said I have this unsecured limit. You just by faith, you trust me. Because I've been a customer of the bank, but you don't require me to put down no security because I've been a customer, like they say, generation customer. So I've been this customer, but I wrote this check, several checks, and my limit is 5,000, but then I wrote, in total, my checks come up to 6,000. Okay, so now I am overdrawn because my unsecured limit that the bank allowed me was 5,000. So now I'm overdrawn 1,000 more than what the bank say. If I'm overdrawn more than 5,000, the bank automatically, I get a service charge for overdraft fees because I'm over the limit that the bank asked me, allowed me. And then a lot of times people don't understand when you get overdraft facilities, every month you're paying overdraft interest. But a lot of people just don't know that. They just say, oh, I need that overdraft, whether it be secured or unsecured, you're still paying an interest to the bank, which is, people don't understand an overdraft is just like a loan. They feel that, oh, I get this overdraft. Yeah, but you secure it with cash, you secure it with, some people secure it with the equity in their mortgage. So they'll say, I need a $200,000 overdraft facility. I have equity in my property, say some 500,000. So the bank gives you an overdraft facility attached to your mortgage loan, holding the equity in the free and clear equity in your home. And so people do that. And in that same situation, they still have to pay interest. So they're still paying interest, just like if I had a mortgage loan, I'm paying interest on that overdraft facility. So every month you'll see some charges plus overdraft interest being charged to that account. Go ahead, Ms. Sutherland.
A customer has the right to receive statement of accounts from the bank. A customer has the right to sue the bank for compensation of a wrongful dishonor of his check. A customer has a right to sue and demand compensation if the bank fails to maintain the secrecy of his account.
Yeah.
Sue bank, sorry.
No, I said that's right.
Okay. Sue bank for wrongful disclosure of his/her account balance. Customer has the right to ask for periodic statement of account from his bank, be informed about any direct operations in his/her account, receive interest on his/her deposits, except for current account, be able to conduct banking in a safe banking environment, know about the concession charges, to receive a complete set of loan agreements and disclosures at the time of disbursement, to ask for the securities as soon as the loan is repaid.
Okay, when they say the customer has the right to receive a complete set of loan agreements and enclosures at the time of disbursement. A lot of times we have where customers get mortgage loans, right? They get mortgage loans, loans are dispersed. Sometimes the money is dispersed to the contractor. And I know in most instances, we have like persons who get mortgage loans at the end where the actual last drawdown or retention stage, it's always where the customer tries to take that money from the contractor by saying that work is not completed properly. So then the bank will disperse that money to the customer instead of the contractor, as long as they can prove that, hey, the contractor did not complete this properly in 90 days, or these are stuff I told him needed to be fixed and he didn't fix it. 90 days has passed, so I'm not giving him this money. I got another contractor to come and inspect and say to me that this is what it's going to cost to correct the stuff that he needed to correct. So what happens? The customer in turn gets the funds, and maybe too, maybe it wasn't that much bad work wasn't done, but because I have a good friend who's the contractor, and he can come and say, yeah, this need to be done, that need to be done, because I need the money. And so a lot of times we have situations where disbursements are done, but unfairly done to the contractor, because the retention actually goes to the customer instead of the contractor. Y'all who work in loans, have y'all ever had an experience like this, where customers are disgruntled and saying the contractor did not complete the repairs or stuff they pointed out to them in 90 days, so they want the retention?
No, ma'am.
Miss Strawn, you work in where?
Bahamas
Credit
mortgage.
union?
What was the question?
Muhammad, I was asking, with disbursements, like, retention. Have you
Right.
ever had a situation where the customer got the retention and not the contractor?
No.
Yeah, because in
Is all, yeah, because if they complain, you make sure that they do the work, and then they would get the retention, but it's no.
so y'all have never had where the customer say, I don't want them to do the work, I just want get somebody else and I want my money?
Not at the end, not at the end. Probably sometimes in maybe the first or the second stage that could happen, but not at the end of the contract. We consider,
Yeah.
if the contract is in 3 stages, we could, if you at the 3rd stage, no. Or
I've known of situations.
yeah, but they don't
I've
get
known
the,
Mhm.
I've never had where the customer got the retention.
What? I have known of situations where
We
people
have,
would say,
we have had some instances where the customer got the retention.
Oh, no.
You work at
Alan?
which,
Yeah,
you work at
Okay.
which bank, Miss John, Miss
I-
Roberts?
I work at the New Providence branch.
Oh, okay, yeah. Yeah, but like I say, I know there's customers who, because they want the money to buy some furnitures or a fridge or whatever, they will crook the contractor, and they get another contractor to come and say that, oh, this wasn't done, that wasn't done. And then the inspector also comes along and agrees with the contractor. And so the contractor who really did the work is beat out the money. They don't get the money. The customer get it, and it really wasn't to say that the contractor didn't do their due diligence. It's just that the customer had a plan all along to get the retention. And a lot of contractors get that happen to them, even though a lot of times people complain and say it's the contractors don't do. A lot of contractors get beat out of their retention by the customers. And like we know, when loans are paid off, like we have to get when the loans is paid off, the customer should get all their documents back. But sometimes it takes so long for you to get your documents, because what happens, I don't know if the situation at the registry has changed, but a lot of times your documents ain't been recorded. This ain't happened, that ain't happened. But at the end of the loan, so we have some persons who paid off their loan for 2 and 3 years, still haven't gotten their final documents back from the bank because of the situation with the registry, stuff like that. And we know that, like, because when the loan is paid off, the bank has to do a satisfaction to say this loan was satisfied. Because if the customer chooses to say in the next 2 or 3 years, because they're still young, I want to build another house or I want to get another mortgage, they have to prove to the company, the bank that they're going to, that, hey, this loan was closed, this loan was satisfied. So the bank has to do a satisfaction, and the satisfaction has to also be recorded in the registry. So the bank does the satisfaction to say this loan is done, closed, and satisfied. And that has to be done for a customer to be able to even use that same property again. They have to show where, if they're not getting paying that bank off, they have to show where that loan was satisfied with a satisfaction attached to their mortgage document. Okay. Then you have the duties of a customer. It is the duty of the customer to present checks and other negotiable instruments during the business hours of the bank. The instruments of credit should be presented by the customer within due time from their dates of issue. A customer must keep the checkbooks issued by the bank in safe custody. In case of theft or loss, it is the duty of the customer to report the matter immediately to the bank. Years ago, there were situations where persons were getting just using persons' old checks. Like I think, like when stuff before some banks or some companies send stuff to the dump to be burned and stuff like that. So they would have a company who does that for them. Some banks do that. And so there was a whole slew of checks that was just persons were just using them and writing checks, and these accounts were closed, and but persons got a hold of some checks and they were just writing them. So the bank was, a lot of banks was hit by those fraudulent checks, because they come in and not now with the ACH is different, but then when it take like a couple days to reach it, by the time it reached to the bank, it's lost recourse, so you can't get nothing, because you have to actually go after the customer, because when the check was presented to the other bank, it already lost recourse. So that's why it is so good with the ACH system, where you can't write a check today and hope and pray that the check don't hit the customer account today. It does. So that's, the ACH is a godsend. And then it's our duty to keep our checks or anything, ATM, everything in safe custody. Hi, Mr. Pickstock. A customer keeps a check issued by the bank in custody in case of theft or loss. The duty of the customer is to, if something happens, like you see with the credit card, they'll tell you when you call, they say if a card is lost or stolen, to report it right away. So they can actually block the card so someone else will not be able. If you lost your checkbook or anything, it's the same thing. Inform the bank. So what they do is just block the account, or they'll say to you, close the account and reopen another account if it feels safer for you. Present the checks and other negotiable items during the business hours of the bank. Notify bank in case of any disagreement in your statement. They'll tell you have a certain number of days to say, oh, something is wrong. At least I think it was 45 days. So if you have your statement get your statement every month, and you have not checked through your bank statement and say, I never wrote this check, or I didn't take this withdrawal, or you haven't checked. So after 45 days, you can't come back to the bank and say, I didn't do this, or I didn't do that, because you had limited time to inform the bank that you did not write a check or you didn't do a withdrawal off your account. Yeah, but a lot of people don't open their statements. So at the end of the day, if they're not opening their statements, what is going to happen? Okay. Notify the bank. Submit photocopies to the bank whenever needed. The instrument of credit should be presented by the customer within a due time for the date of issue. A customer should fill the check with utmost care. If a customer finds any forgery in the amount the check is issued by him, it should then immediately report to the bank. Any questions, anything to add to what I've just read?
Okay, can I, Ms. Smith?
Hi.
One question that
Hi.
I have is, as a teller, I process I process a few fraudulent checks before, and I couldn't tell if a check was fraudulent. So how could
No,
you
y'all don't have
say to me?
something. Y'all don't have something. The bank don't have something to say to you. Certain symbols for you to check to ensure that the check is fraudulent, especially
Okay, so
checks that are made here by, I don't know, Executive Print is still around. They used to
I'm not
make a lot
sure.
of the checks. because I know, like when I used to work at the bank and I was on the committee that dealt with with when they first start to introduce how to these different codings they put on the back of a check to ensure that banks know that if you don't see the conch shell, if you don't see this, if you press this and it don't, you should be able to detect that the check is fraudulent. Y'all didn't. First Caribbean was involved. They should have had that because I was on that committee and I remember all of the banks was there when they started to implement the system to detect, because there was so much fraudulent check, they had a system. You rub it and there's a conch shell, or you do this and that should happen, or you hold it up and you should be able to see the watermark, stuff like that. They never taught you all that.
Well, I
Mr.
learned
Textor?
after the fact,
Mhm.
after I processed
Uh,
time, I was told afterwards. But
uh-huh.
what happened was I went to the bank. The system picked the code was wrong because first card check, but the particular branch that was not open anymore. It was closed, and there was an RBC branch that was closed, and they don't use that anymore. But the encoding was showing the system, but the guy sent it straight through because the system usually gives still if it. He said, okay, the check didn't read properly, just send it through. So then we realized that it was fraudulent with my big stamp number
Uh-huh.
and signature on it.
So
And,
what happened?
well, the Mr. Bigstock too. You just processing it. So we understand that you don't know what fraudulent checks is, so we can let it slide at that point. But I just got to be careful. But I never really fraudulent checks until that moment, and so
Okay.
that's why I asked. In other terms of just looking at a
Yeah.
check telling it's fraudulent.
No, but it has some description on the back. You hold it up, you see a watermark, you rub it, the conch shell should show up. Yeah, there was a lot of distinct identification on the check to determine whether it's fraudulent. And then to like couple years, um, there was a lot of persons forging government checks like NIB and the Treasury by lifting signatures from an actual check and putting it on a check. So, and then a lot of times it's not determined that it is until like after the check has already been paid. Yeah. So we've had a lot of persons who do that too with government checks. Yeah. A lot of persons who do that with government checks. All right. Mr. Peckstock, you want to pick up for me the rights of a customer, the rights and duties of a banker towards a customer?
Sure, no problem. Duties or obligations of a banker towards the customer. The banker is to honor check of the customer provided. The checks are the customer has a balance as credit, the contract has been signed, there is no legal bar or restriction attaching to the customer's funds. Standing orders. In the duty of the bank to abide by the standing orders of the customers in making periodic payments on behalf of such as club, library, insurance premium, etc. The secrecy of the customer's account. The bank has a contractual duty not to disclose the customer's information, financial position, with his consent. However, the obligation are confidential on the following occasion. Required to report when there is national emergency and disclosure is essential to the public interest, where there are clear proofs of treason to the state, when they consent the customer to provide information for the preparation of balance sheet. Okay, so question:
Mm-hmm.
why, as a consumer,
Mm-hmm.
why my account has to be made known in a natural disaster or a
Why does
national
your account have
emergency?
a
Like
natural
my account
emergency?
balance. Why does the whole world have to know my account balance when things stuff happen?
When there's, well, now I don't know, but that happening over here. because I know most with any only time your bank balances or your bank account is actually disclosed is if you have a court case, and like persons like drug dealers and all the rest, and people who have fraud or whatever, they would say that, okay, the bank has the duty in that situation, the bank could actually testify and actually talk about your account. Now, I don't know about the natural disaster over here. Maybe this isn't, foreign, but not here. But I know the bank, the police could make you, the court could make you give up any information that they need related to a customer account if they have charges filed against that customer. And like I say, like when the FIU put, or the government, they freeze the customer account. FIU freeze their account because of um, they've been interdicted, and so they have to freeze the account. I know in that case they can give the information.
Okay. A bank has an overriding duty of care to its customers, especially when giving advice to them. Two recent high court cases have considered a bank's duties to its customers in the context of giving advice. All such cases are highly fact sensitive. However, the starting remains that an absence of contractual basis for the duty to advise. It will take exceptional circumstances for a bank to assume a duty in tort. Turning the page. In the Finch case, one, a commercial customer with financial and legal advisors engaged alleged the bank had breached its duty to advise the customer under both contract and tort, specifically in relation to the terms of break clause in a fixed rate loan. The court concluded that there was no contractual duty, either express or implied, for the bank to advise the customer. The judge also held that there was no assumed duty in tort and that it would require exceptional circumstances for a bank to be under a duty to advise, particularly in circumstances where the bank may be acting contrary to its commercial interests in providing that advice. The claim against the bank accordingly failed. In the O'Hare case, number two, the bank provided investment recommendations as to various financial instructions over the course of more than a decade. The investments included the bank's products from other banks. The court unsurprisingly held that there was a duty in both contract and tort to advise. On the fact, however, the court held that the bank had not breached its duty and the claim failed. The judge noted that the duty of care in relation to investment advice was a balance between the bank sometimes having to save their customers from themselves and the other customer taking responsibility for investment decisions, including poor decisions. The ultimate outcome of both cases will be of no surprise for those routinely involved in the financial service industry. However, given that every case turns on its own facts, there remains the need for banks to be vigilant that they do not inadvertently assume a duty to advise, especially in a long-running customer relationships.
Nice, nice.
One.
As we know, banks, as a customer relations officer, we sometimes give advice, and at the end of the day it comes back to us because we have to be very careful on the advice we give the customers because the customer could use it. So we have to follow what the bank policies and procedures are before we go there giving a customer, giving them advice. And sometimes we say stuff to customers being a representative of the bank that we shouldn't say to a customer, like I say, things that we shouldn't say. So we have to be very careful. Well, y'all bankers have to be very careful on giving advice to customers when it comes to loans, when it comes to opening a savings or checking, term deposit, any information that a customer could hold legally against the bank. Bankers should, actually, before giving advice, make sure they know the legal ramification, what can happen if a customer choose to use this information that you give them against the bank. But as we know, in anything, the bank will win. Like you see those two scenarios, both scenario, the court, it fails, so the bank still win. Other relationship between the bank and customer, garnish or order of the court. And we know garnish or order of the court. It is the duty of the banker to abide by the order of the court, garnish order, and attach the funds of the customer to the creditor who has obtained the order in favor. Say, for instance, the order of the court. Say, okay, I think they do that a lot in the United States. I'm not sure, but I know in the US, if you get a job, you have that real property tax or that tax that you ain't paid. The bank, the government garnishes your salary. So every month, your company have to present a certain amount to the government, and then a certain amount to your account. So garnishing funds, that could happen. And that's why I think national insurance need to do that here for a lot of persons who go on to school and come back and they pay the government, that's the student loan. They just need to go to national insurance and see where the person work, and then garnish their funds, because we got a lot of persons who work in good jobs and not paying their government loans. And so that's where a lot of times people's funds are garnished by that. Right to set off. It is the right of the banker to adjust the outstanding loans in the name of the customer from his credit balance of any of the account he is maintaining with the bank. Do you think that is fair that, say say Mr. Pickstock, you're on an account with your sister. They don't know that, but your sister owed the bank. And so because she's on your account and that's your money, you think it's fair for the bank to actually deduct her payment of your account with not first knowing that her name is there, but it's really your account. Her name is just there in case something happened to you.
No, it is not fair for the bank to remove funds of my account. But I understand the fact that my sister has an outstanding loan. But
Mhm.
if I am the one of the person that is solely off the account, that should not happen. And like if it happens to me before my loan officer, I say, Miss Johnson, when can I come in this bank and get my money back? Because I didn't pay my loan. I things like that should never happen. In the case that I
Yeah.
said, like I said, I understand the reason why the bank did it because she's on the
Yeah.
account. But if it's my
Right.
salary and if my stuff being deposited,
Mhm.
it's my money. I know you loan money. I ain't got no contract with you no loan, so don't touch Mr. Big Fox's money.
Have any of you ever had that experience where
No,
you hold
ma'am.
But
an account?
but
Okay.
but how can that happen if that
Yeah.
should only happen if the person is a primary, right? So whether the
No.
person is secondary or primary, they funds still could be
Yeah.
removed because their name is on that.
Yeah. I've
That
seen
don't
that
make no
happen on
sense.
so much cases. And you, like Mr. Pickstock say, you have to go into the bank and say, hey, this is my account. No, no, no,
Yeah,
no, no.
especially if
Mm-mm.
the person is primary.
But
What
then
they owe
see,
you don't have nothing to do with me.
Well, when I went to Bank of the Bahamas, because at the time I had to open an account with Bank of the Bahamas, I was 17. So me and my brother had to get a joint account. So when I went for a loan, Bank of the Bahamas told me I had to get a separate account for loan. I could have used my primary account, but my brother could still remove funds of my account. So the Bank of the Bahamas say we can't take no chance with that. So they said open up an actual loan account for just a loan. So I understand why the banks do, but at the end of the day, if it ain't sister girl money, don't touch it.
Mm-mm.
okay, hold on 1 second for me, please. Hold on. Okay, sorry about that. Yeah, but it happens. And like say for instance, and a lot of times too, people even don't really, they'll say I'm guaranteeing a loan. You guarantee a loan and you have an account. The person ain't on the account with you, but you what you do, you guaranteeing a mortgage loan or you guaranteeing a personal loan. And so what? If the person ain't making the payment, who's responsible to make the payment? Where the bank can find the money? Isn't the bank allowed to take the money off your account because you guarantee the loan?
Yes, that is the case. Because
But a lot of people don't understand what guarantee means.
when you sign a loan, you sign that the bank is liable to take off of your person. I sign that they're liable to take off my savings account in the event that my loan is not being paid. So I understand that aspect. But at the end of the day, if they see if the bank, if the person at the account sees that happening and they alert to the bank should be able to, like, okay, you need to get a different account then if this is gonna happen, not just say just taking off of somebody else's money.
Okay, but what I was also saying, a guarantor, a lot of times people don't know a guarantor is like a co-applicant. They don't understand that because a guarantor steps into place. If I get a loan and I'm not able to pay that loan, you come and you guarantor that loan. So you guarantee that loan. So what happened? You sign a document to say if I can't pay, you can pay. But a lot of people don't understand that. So when the bank start coming at them to say, okay, but you guarantee the loan with this customer. But I am not a co-applicant. You guarantee the loan. You may not have say co-applicant, but there's a guarantee form that says Andrea Smith guarantee this loan for Joe Smith. So I am just as responsible because I guarantee the loan. But a lot of times people don't know a guarantor. The bank has the rights to take the money from my account or make me pay. Yeah.
So,
Yeah.
Miss, so can the guarantor go in and get information on the loan?
He should because he guarantor the account. A guarantor is just like you have to sign one form too, say I guarantee this loan for so and so for a certain amount, and you have to sign that form. That have to be stamped and everything. As a guarantor, you have to sign and stamp. That form have to be stamped.
So how okay, a husband and wife get a mortgage.
Mm-hmm.
They get the mortgage, they got the mortgage, and then the wife managed to find out that okay, I'm here to check on our account.
Uh-huh.
And they say, okay, we can't give you no information on the account. The two of them have the mortgage. The money coming
No,
out.
hold on. Well, how they can't give you no information?
I'm serious, because the money you paying half and your husband paying half, and they don't want to give the wife no information on the account.
No. Your wife must see name me on that account. Must see a dear way.
What did it say? I know nothing yet.
The wife name ain't there. The wife name can't be there.
Yeah, but they taking that money out that pay.
Well, she must see I know how they can take. You don't take no money out of my pay and I can't get no information. Something wrong with that. No. If both of us have that loan together, no. I should be able to get information just again. And more so it coming out of my pay? No.
Yeah.
And they live in the same house?
Yeah, they live in the same house. But after he work on a family island and she work in Nassau. And when she went there, they tell us they can't give no information on the loan. Wow.
Oh no, stop payment, not of my money anymore. I'll be going to the place and me. What? I can't see that. If the mortgage is in both names, that mortgage must be in his name and she agreed to let it come with her salary.
But how come in her salary? That's the thing.
That's what I said. She must see agreed. The Lord of this David, she agreed to come with her salary. I don't even understand that. I don't understand that.
That's gonna be a big movie.
It is. I swear. It is the right of the banker to charge interest, commission, etc., according to the rate for the services the banker has rendered to the customer as an agent trustee. Well, we know the bank, when you get a loan, you have to pay that administration fees because that's the bank work for you. So you have to pay that administration fees on whatever loan you get from the bank, be it personal, be it mortgage, you have to pay administration fees. And we know government stamp tax is automatic, right? To lien, a bank has the right to retain the property belonging to the customer until the debt due from him has been paid. Like we know, bank hold properties, mortgages, term deposit, boats, cars, anything. They're holding, the hold is not released until the loan is fully paid. And that is why when you have a car and you have a car that has a comprehensive insurance, automatically the bank is named loss pay. If you have a mortgage, when you do the house insurance, the bank is named loss pay right off the bat. Anything happen, the bank gets paid first. Whatever is left, the house burned down, that loan getting paid off first. What is left, then you will get, the customer will get. And that is the reason why on any insurance, you have the bank is loss pay, or whatever company you have the loan with. Any questions concern on chapter 5?
So you don't tell me that I've been in Colleen Insurance for 35 years, $200 a month. My house decides to catch a fire. I outside crying because everything inside burning, and you what you just know what's happening. You trying to tell me bank getting check before me?
Yeah, because you borrow the money from the bank and the insurance, anytime an insurance company take an insurance out for you for a house, the off the bat, the insurance company have to find out from you, is the bank, is the house finance? Do you still owe the bank? And off the bat, they have to put the bank as loss pay. So you get what left over. The bank, the mortgage loan got to get paid off first.
Yeah, that happened with a lot of our clients with the Hurricane Dorian. The monies that came from the insurance was used to pay off their debt with us.
That's right.
So when that check wasn't happy for them.
No, that was happy for you.
That was happy for us, and we had a lot of people.
I know what's gonna happen to be in my mind and y'all building, but child, something's up to wake up. Something's up to happen. Something's gonna come down. Windows, chairs, everything's get through by the time I was finished with that building. Cause I didn't even know without check. Cause I can't believe this. Cause I was starting leaving that place on a check.
Yeah, well, you better leave with a check, but not as much as the bank. Because if you'd owe the bank $150,000 and your house insurance was say $225,000, the bank $150,000 getting out that first already, and you getting what left.
But man, Miss Smith, now you say it now. You say the thing is your bill was 150. I would have buying 225. You not leave with that.
No, I say if the balance you owe them is 150, and like I said, the insurable amount is 225. They getting the 150, and what left is yours.
Miss Smith.
Now,
wouldn't that just speak to if the client was in arrears or not? Because if the client is in good standing, the bank would give them the full proceeds minus the deductible.
You sure? If the house totally burned down?
Yeah, the house totally burned down. Even though the bank
pay the mortgage off?
It almost as if it resets itself. If the total mortgage is $180,000 left to pay, but the client is up to date, and the house is worth $225.
You'll give all to the client?
Minus the deductible to rebuild the house. Minus the deductible.
So you what happens to the loan that the client has? Say the client loan is 200 and something thousand.
Well, the thing about
what happens to that? What happens to the loan?
The thing about it is if the client still has 20-year term left on the mortgage, we just rewrite the mortgage.
And the customer could let you rewrite the mortgage instead of paying that off?
Well, it depends. Do they want to rebuild the house or not? Do they want to make the repairs or not?
Oh, I never understood it that way.
You remember
I
now that
always thought, it only happens if it's in arrears?
if it's in
Pardon me?
arrears, I think what they're speaking to is clients at $60,000-$70,000. I don't know, speaking for the commercial bank standpoint, $60,000-$70,000 in arrears, and you've been riding that arrears balance for a little while, and this check
Then
comes
the
in.
bank will, mhm.
Yeah, that's when the bank steps in and says,
But
okay,
I'm gonna say, if my house burned down, I owe 180,000. I got 200 and something $1,000 from the bank, from the insurance company, and you say with the deductible, I gonna let y'all rewrite that loan instead of paying y'all majority of that money off.
you have someplace else to live, or
I can find someplace else to live because I ain't go. You know what it is to rewrite a loan on the top of a loan? That
that's
is like,
we speaking against borrowing against a mortgage. Like the mortgage itself is 180,000 left to go, and your house burns down. Now you getting the full insurance check of what your house is
I can
appraised
give y'all,
for.
no. I can pay y'all some of that money. You ain't gonna give me that big loan.
Some people do it. Some people do it, and some people don't. Some people just come in and say, "Hey,
Yeah, I ain't take that
I need
big
a place to
loan
live."
because then I take that big loan. What happened? I just never finished paying the bank. No, I can actually. Miss Roll.
Well, I know with us, our clients was in arrears, saying that we are delinquent agency. So I don't think they ever had that choice in terms of
They had to pay all.
Yeah, they didn't have that choice with us.
And
Now
so
some
did any
people left with balances.
Okay. Some, even though they still had balances, so what happened to the balances that they left with?
Once the check covers everything, if there's a little leave over, then it's paid to them.
But what happens if the check don't cover all of it? What happens to the little
Then they
balance?
just continue to pay.
And they have nothing?
Yeah, because at the end of the day, if you look at Gateway Ascendancy, this is your second chance.
Right. Yeah.
We are your second chance. So I mean,
and like I say,
like that.
Hold on, because I may have break it for the people. My house ain't burned down. My house ain't get destroyed. I feel for the people because I mean I understand. Okay, I understand the rest, but my lord, you know there's a lose your house, your car, and everything in that gateway or whatever financial is still telling me I can't
Trust
get
me,
no.
we have a lot of people that is say, "Oh, I didn't pay this off, and I can't find the receipt and." This and I have to come up in here, and trust me, I hear the stories. I feel bad for these people. I really, really do. But ain't nothing you can do about it.
And like I say, nowadays, in our country today, between COVID and Dorian, it's really set a lot of people back. It's really people who like we say, people who've been making good money. It wasn't something as a natural disaster. COVID is a disaster. It was just something that happened. Nobody foresee it. And even if you were a person who paid your mortgage on time, you did everything right. But COVID came and you lost your job or you got laid off, and you know your wife could continue to make the payment because y'all made the payment because of your salary. So unforeseen situation happen. What happens? Which could you do? You can't do anything. Some banks will work with you. Some places don't. They be happy and grateful to put the house for sale because their friend down the road won't buy that. And it happens. But it's sad. It's sad, and a lot of people have lost their homes. A lot of people have lost their homes, be it small, be it big, because of COVID and Dorian. There's a lot of people in Abaco have lost their homes. People who I know I worked with at Fidelity. Yeah, a lot of people, good structured homes, lost them, Yeah, and like we say, the insurance companies, whatever they have it insured for, the arrears has to be paid off first and then go from there. Now, even if all the money is paid to you, the building materials is costing you so much money. You as a person have to go look for a repossessed house, because trying to build again from scratch is like everywhere you turn, you go looking for materials. It's like, oh, no materials. So at the end of the day, you still at a loss, and even though Mr. Ferguson say where you can live, boy, sometimes you go find them people rent a house because until you can find one good repossessed one, because trying to build again is not easy.
Mr. Ferguson trying to trap you. That's what it is. That's exactly what it is.
So you wouldn't bill again, fixed stock? You wouldn't bill
Try to
again?
get that next big loan on top of loan.
Yeah,
You
I
wouldn't
know,
bill-
right? And listen. Okay, listen. Right.
Is
So,
You wouldn't bill
in this
again,
instance,
fixed stock?
in this, I try to explain myself. In this instance, right now, let's say if my loan was not in arrears, right, and I was able to get that check from the insurance company, I would bill again.
Mm,
But
okay.
if I was in, let's say, 3 months arrears, and let's say the payable is, let's say if I've left over $40,000, I can give Mr. Ferguson and whatever they got and take my little 40 grand and go somewhere else and try to find a little pop to put myself in, because I ain't current. I don't know you $108,000. I ain't gonna refinance. Probably $108,000 with y'all 13, 15, 18, 20% interest. Mr. Pixel can be in debt for y'all until he go to grades. I can't.
But I guess
no.
where Mr. Ferguson coming from is what if when you get at your retirement age and you can't work anymore?
Your home is the
Well,
biggest
then-
investment of your life.
What are you gonna do?
But
Exactly.
then this is where national insurance come in. I pay national insurance.
Oh,
You're gonna pay on national insurance? That's very powerful. You're very brave.
bro.
but at the end of the day, when you see things like this is why there's a lot of opportunities and options that you could do to help yourself to build yourself for retirement. So I would encourage anybody to get like a retirement fund or something like that. But like if so not some national insurance check you could live off. You can live off some national insurance checks. It depends on some of them the checks you get for national insurance. But I ain't guarantee all that refinancing. I can't. That's too much more. I ain't guarantee that.
It's not refinancing. You already owe 180,000. It's basically holding the loan at a standstill and giving you whatever proceeds come from the insurance company to rebuild your home. And once you get that, then we restart the mortgage again.
So I owe you. Okay, go ahead.
Okay, so let me see if I understand this. So it's 180, right? I get my little $200,000 from Kalina. So you're trying to tell me now, after that, I go back from 180 to go back to being owing $350,000?
No.
Where I start off from?
No, that's not what it. Okay.
You only owe them the 180.
Okay, let me give you an illustration.
So
where
is the term longer?
No, I can give you an illustration right now where someone came out ahead. I have this one client that I know for a fact that she was 2 years ahead in her payments. The hurricane came and damaged her roof. Now, when the adjusters came out, they looked at the roof and said, okay, this is going to take X, Y, and Z to repair this roof. We can cut you a check for $22,000 after your deductible. She said, okay, fine. She found someone to repair a roof for $9,000 and then pocketed the rest.
Okay. Yeah. But Mr. Pixar, what he's saying, they'll just have that $180,000 on hold, that loan. But you get that big fat check for 200 and something thousand, so you could go build your house over. And then when everything is finalized, then your loan can start again.
But that's giving you up to date with your mortgage payments.
Yeah.
You would have to be ahead. Because that's the only way you can get the check.
So we're talking about deductible, right? Because let's say my house, let's say the roof repair is going to take up to 3 months, right? So are you going to take 3 months deductible out of that to keep it current until the roof is fixed?
The deductible is handled by the insurance company. No bank has any interest.
When you look at your contract, it tells you what your deductible is.
Okay.
Okay. So now we want to look at chapter 6, which deals with customers, a customer account and products. Everyone had an opportunity to look at the review sheet.
Yes, I got.
Because now remember the review sheet is up to chapter 5, but I want to look at chapter 6 now. But any questions, any concerns for y'all who had a chance to look at it? And I'm going to say to y'all, when I give you the review sheet, it's not for you to go through, look for the answers, you know. It's actually for you to go through, read, so you understand, because it's no sense just looking at the answers. It's better for you to read through and understand the actual question that's being asked, the choices you have with the answer, choices of answers, you know, and we know the best answer is the only way you can determine the best answer is by reading, even though you may go through and just pick out and say this what it is. Best place for you to determine the answers by reading, because I realized in the quiz that I gave, it was like some people was just saying true, false, true, false, true, true. It was like I could tell persons who really didn't read, because I would see that in marking. So quiz is only 10%. Remember, midterm is more. So please try to read. You have all in, from today until next week. Monday is the exam. So try your best to read to come up with the correct answer, the best answer. Okay, because midterm is more. Quiz is just 10% of your grade. And like I say, I don't think nobody should come out of business of banking with a C. B should be the lowest grade anybody come out of business of banking with. I don't like the C's, and that's why I give you the review sheet. So I expect you to read and be able to select the correct answer from your reading, not just selecting, going through and selecting the answer. Okay. Chapter 6 talks about customer accounts and products. As we know, all banks offer different service, but all banks offer the same banking products. Because I could go to a Royal Bank and have a different experience with the customer service than I have at, say, a Commonwealth Bank. Because I can go to a Royal Bank and the customer service was poor. They didn't even acknowledge you as being a customer. Then I can go to a Commonwealth Bank and I'm given the service that what I had at RBC doesn't even compare with the service that I got at Commonwealth Bank. But like we know, back in the days, we'd have like where banks only offer a certain product and certain products. Now we have where most banks, like I say, it's not only banks anymore. We have insurance company, credit union. We have private persons offering consumer loans, consumer loans where you can get a car, consumer loans where you can borrow up to $20,000 and pay back. You know, we have different places, Easy Term, Auto H&L, Greenleaf, all over. So we have so many persons who are lenders now in the market. So the products we offer is everybody's offering the same product, especially when it comes to lending. Nowadays, the rate is so high. Like I said to the class before, when somebody in my class last, and they said the rate is 21%. I'm like, I'm gonna get a loan with 21%? No way, Jose. What is Mr. Ferguson? What is the mortgage corp mortgage rate now?
The standard rate is 6.75.
Great. And what is the maximum that mortgage corp lends to consumers?
I think, I'm not sure if Leslie's listening, if Leslie can answer it. She got knocked up.
Hi,
I think
Leslie.
it's 2,237,500. I'm not sure. As after VAT. I'm not sure.
And what is the actual requirement, like closing cost deposit that a customer would have to
Well,
put down?
essentially, that's our gimmick. That's how we beat the commercial banks.
Mhm.
We can pay your legal fees for you.
Mhm.
So we would usually only ask for deposit and down payment.
And what would the deposit be like if I get like 150,000?
5%.
Just 5% of that.
5%.
Do y'all do a lot of advertising for government people to know?
Well, we are venturing into that field now, where we just held a mortgage fair. I don't know if you guys heard about it. It was
Yeah, I think I did.
Yeah, it was island wide, and we plan to do more of that. We are really revving up the.
So y'all are going to be the actual lenders for the government project?
Yeah, though we were all, I think in years past, we were always the primary lender, even though they would
Okay.
allow the commercial banks to come in and facilitate some of the loans.
Mm-hmm.
But we were always the primary lender when it comes to the government initiated homes.
Okay. And like I know a lot of persons fill out loan application with housing. Do you all use some of those to, or persons just come into your,
Yeah, ask me again. You broke up.
like, like mortgage, like Ministry of Housing have a lot of persons on, waiting for houses. So do y'all allocate houses to those persons?
We also provide private loans. You don't necessarily have to go to the Ministry of Housing.
Okay.
That's
But
the avenue that I took. I didn't wait on the Ministry of Housing. I actually went to CIBC and secured something and let the corporation finance it for me.
Okay, all right. Repossess something.
Yes, ma'am.
Okay. Yeah, but y'all have to do some more promotions, because I know of several persons who want to, they work in government, but going through the like a regular bank, the deposit is so high. But you require 5% down.
We working on it. That mortgage fair was crazy. Whoa.
Yeah, because a lot, when you go to actual Fidelity, from Finco, Royal Bank, it's like they asking you closing costs alone, and then they asking you to come up with like $30,000.
30,000, 25, 30. That's what we're hearing on the. You got to pay legal fees. You have to pay everything.
Right. And so that's why I say y'all could really make a brand out there. If y'all actually really, like you say, y'all started the fair. That's what y'all need to do, because a lot of persons cannot qualify at the other banks because of they asking a young person to find $30,000 or $25,000.
Yeah.
And plus pay your own closing costs, like your house insurance, your legal fees.
Yeah.
Yeah. So that'll be a good thing. And like I say, all banks offer the same service, same products, because like typical retail bank products offered by the banks are, we have current account. Current accounts are referred to a type of deposit accounts in the financial, where they do withdrawals. And with current accounts is where you have a checkbook, and so you can write checks to different companies. And we know too, with writing a check, we have well, I don't know if they still have the check card, because it was around when I was younger, where I had a check card from since I was 19. And when you write a check, you had to have that check card. If you wanted that check to be able to write a check, they'd say you have to have the check card, present that when you write a check to certain companies. Other than that, you have to know the persons at companies that you write in a check to. They'll allow you to do it. They have you in the system so you can write a check. Then we have deposit accounts. Deposit accounts are savings, mostly savings account, where you put your money, you make deposits, you get interest. Well, the interest rates are so low now on our savings account. Miss Natasha, what is the interest rate of Scotia now? Is there any on a saving?
I'm not sure, but I don't get any on my savings.
What about Mona? What about Fidelity?
1.75.
And how much you have to have in the account?
500.
Okay, 1.75 at 500. What is the rates now on term deposit, like say a 10,000? Just off the bat.
1.75.
Whoa.
I think it has
remember.
to be 100,000 or more to negotiate.
Okay, already. Okay. So like I say, we know with deposit accounts can, before we, in the back in the days, we had the book. Like I say, most banks or all banks have phased out the book. And like we know, most banks are trying, really pushing online banking, digital banking, pushing more use of the ATM. So that's another. Individual savings accounts. We have like I say, some banks have the Christmas club, some banks have um, joint savings account, individual savings account, and just an actual regular savings account where people just save for hard times, for college funds, for retirement. Term deposit. We know term deposit, they are generally short-term deposit with maturity ranging anywhere from 1 month to a few years. So I guess the longer the term, the higher the rate, Mona.
Yes, ma'am.
Okay. And like I say, with term deposit, a lot of clients, they put it on and they say, well, unforeseen situations happen. And so they have to come in, break the term deposit. And when they break it, they either lose the interest. And a lot of times people not aware that if I have a term deposit where it has two persons, that both persons have to actually break that term deposit. Both signatures are needed, whether it's either to sign or not. Both parties are needed to sign to take that money, to break that term deposit. A lot of people don't know that because they'll be like, but this is and or. It's or. Either of us can do this, but you're breaking the term deposit and both of you have to sign to close to break the term deposit. And a lot of times people don't understand that when you break it, just like you break an agreement, there are charges, there are fees you have to pay. There's some charges or fees that you lose, income that you would lose because you've broken an agreement. Then we have mortgage loans. As we know, mortgage loans is a debt instrument secured by collaterals of specific real estate property that the borrower is obligated to pay back with a predetermined set of payment. Most of the time, younger persons will get a mortgage loan, and the mortgage loan they can get up to 30 years according to your age. And I would always say to younger persons, yes, you can get a mortgage for 30 years, but guess what? It makes it the longer the term, the less the payment. So I'm saying if you get a mortgage for 30 years, always use that length of time and put money on your principal because your payment is going to be smaller and maybe you can afford much more. They take that same money and put that extra on your principal. So if your payment is $1,000 a month, if you can afford $2,500 a month, but you just choose to get it for that 30 years, you take at least $1,000 out of that money every month and put that to your principal. And you'd see it'll cut your whole mortgage term down. And the interest would also be cut down. But a lot of persons don't know that. So they continue to pay. And like I said, most of your money actually goes to interest. So when you get a mortgage, when you're young, you could say, I want a mortgage for, more than, I want it for 30 or 25 years, which is good. Because guess what? At the end of the day, you can put money to the principal and beat the bank interest. And we know when we get a mortgage, right off the bat, you have to put down property security. So the bank will hold the security, just like I say, the bank is considered loss payee on your house insurance because you got the mortgage with them. Anything happened to the house, the bank is lost pay. So funds, like Mr. Ferguson say, they'll give you the opportunity, as long as you're not in arrest, that you can keep the funds and the loan is on hold until, I guess, you finish rebuilding your house, Mr. Ferguson?
Rebuilding or renovating.
Okay.
Once it becomes livable and the inspector comes and deems that it's livable and you can move in, there's another conversation. You need to start paying.
Okay, all righty. We have personal loans. Like, with personal loans, people go to the bank to get a consumer loan for vacation, wedding, buy furnitures, repairs, air conditioning, computer, refrigerator. People just go to the bank to get money for cars, and they sometimes don't need it. And most of the times, some of these loans are unsecured or secured by asset or by a co-signer, like we talked about, a guarantor. And unsecured loans called signature loans are advanced on the basis of the borrower credit history and ability to repay the loan from personal income. Repayment is usually through fixed amount installments over a fixed term, also called customer loan. And as we know, in the climate that we're in today, the banks are making so much money on these consumer loans because government persons are actually in bondage, because they get a loan today, something happened 3 months down the way, they come to, say, a Commonwealth Bank, and Commonwealth Bank say, well, you don't pay enough yet. So what they do, they go to Scotia Bank, Fidelity Bank, and say, oh, y'all could pay them off, and I need this amount of money. So before they know it, they're in $80,000 bracket of consumer loans, and they haven't gotten a property as yet, but they're consumed by consumer loans, and they have nothing tangible to show. And a lot of persons today is facing that. Mr. Ferguson, y'all don't give consumer loans, right?
No, ma'am, that is not one of our current products. But clients be asking. They try.
But if customers have mortgages that y'all are good payers and they want funds from you because they have equity in their property, do you give that to them with your lender?
Oh, ma'am, that's not a practice of the corporation. We would only lend money for renovations or repairs.
Okay, so if they have a mortgage with you, they have enough equity and they need to do some repairs, you'd lend them the money.
Yes, ma'am.
Okay, all right, understood. Yeah, but like I say, nowadays in the climate we're in, government employees are up to their neck with consumer loans because the bankers just made them a slave to borrowing. So, and it's the competition out there so rough. So everybody's competing for the same customers. So yeah. So if you come to me and I can offer you, and sometimes people just come to say, I just need 6,000, and they're gonna they'll come to Commonwealth Bank and pay off Fidelity for 6,000 and end up paying so much more money. It's just so rough, and like we talked about it before, what are we going to do when the credit bureau come into play? What is going to happen when the credit bureau comes into play, where now persons are being tracked in your credit rating? And so I go on to Fidelity and I get 50,000 and my salary, all this money coming out of my salary, the credit bureau look at it and say, oh, hold on, no more money you can borrow. The banks are going to really suffer. Persons working in the bank who in this competitive where you have to say, oh, you're a what? You're a personal banking officer. Oh, you need to bring in $400,000 a month. How am I going to bring that in when all the persons now that we've lent money to is up to the bar, and now with the credit bureau, they can't borrow anything anymore? What is going to happen? What do you feel is going to happen to the banks who totally rely on consumer loans? What is going to happen? Any
Credit bureau,
Banks?
the credit bureau is going to get pushed back another 5 years.
You think so? Would you take the bite step to keep causing it to get pushed back? No, but I thought they have people in place, the credit bureau ready to go.
That's fine. Money got to make in the country. You see, 5 years.
Now they still gotta go up and bank the farmers and get they loan too. Ain't happening right now.
You think not? Man, I really was looking forward because with the credit bureau, when it comes online now, the credit bureau relates to whether you pay your light bill on time, your credit card on time, your water bill on time, your cable bill, all of this is taken into consideration.
No, Miss Smith, let's think. If they have everybody in place, they say everybody is in place for the credit bureau, and it ain't started yet. And it ain't make no sense. It ain't happening right now. So everybody just can go walk up the road. I personally ain't gonna call my bank. I ain't gonna call my bank. They offering $5,000 you to get a loan. I don't care what the bank off me. I ain't gonna call my bank. But anybody go run up in the bank right now and get one because the credit bureau in place, and I believe the government is not really gonna push it. It's gonna take a different government, not this one. But they're gonna take a different government to go push that.
Why?
See, the PLP is all about
the people
stimulating the economy,
making the economy work.
So
putting money in the people's pocket.
So that's right. PLP all the way, but they're not gonna really push it because at the end of the day, it's a lot of families. Let's say people really need it, and then because let's say, or because I ain't pay BPL one month, I can't get on one. You know what I'm saying? I trying to get a loan, pay BPL also keep the light on. So there's a lot of things they're not really right. They're gonna push it.
So what is happening? If they're gonna push it back, so what are they doing with the people who they already hire in the credit bureau? Then so it's going to be like what the lady who in charge
like the public service.
Right. She said they have people in place who get paid.
Yeah. They just can sit there and collect big check until such time as they're ready for them. So,
but as you know now, in the government ministries, because of COVID, you have people going to wait 2 and 3 days and getting paid for the full month.
Yes, ma'am.
Because their job they can't even work from home because their job ain't entail nothing for them to work from home. But they go to work 3 days and they getting paid for the full month, 3 days a week and getting paid for the full month. I see today, I was trying to reach out to National Insurance, and every number I call say, what's going on at National Insurance? I couldn't even reach them. Every number I dial.
Good luck with that. Because I've been trying to reach National Insurance since I put in my stuff from January. Good luck with that.
Good luck. I put in my stuff. I retired from the bank from last year, March. I haven't gotten a penny. So when you sit and say, but you can get you a couple dollars from National Insurance, well, if you're sitting and waiting for that, you'll be like me with no pay. I put in my pension from last year. I've left Fidelity almost a year. I have not gotten $1, and I've worked for 40 years and I've not gotten it.
Look on the bright side, though, Smith.
Every time I call, it's some different story. What's the bright side?
The bright side is when they pay you, you get a good check.
Yeah, but guess what? I can croak with. Okay, suppose I croak before that check come. What happened there? It going back in the government pocket because it ain't gonna be given to my family.
Right back to the government.
That's what I say, and I just think that's so unfair that people pay and work for so long, and because you didn't retire at like people that say they working for 65. I told them no, I did early retirement. I'm not staying on nobody's job until 65 because guess what? I look at so much people who was my friend and been a classmate. They die at 60, 61. Who said they're waiting for 65? Never get the money. Why? People work up to 65, 2 weeks later die. So what happens to the money? That's what I always said. If people work for so long, how is it National Insurance? I know persons who married and they have spouses. They'll get spousal survivors benefit. But for persons who isn't, What happens to the money? How come it stays into national insurance instead of being given to the family? That's what I never understood. So, Mr. Pixog, if you're waiting for national insurance, you better make sure someday by the time you're ready to retire. Yeah. Credit card, like we always say, credit card is considered revolving. Why do you think they say credit card is revolving credit?
As long as you pay it off before the due date, you get to use the money again.
Okay. Yep. And that's what happens, with credit card. What we don't understand. And what is the interest rate on credit card, Miss Natasha or Mona?
Some of the cards I see ranging from like 11% and up.
Mona?
I don't want to quote wrong because I don't sell them. I ain't gonna lie to you.
But I know the last
some
time
customers don't even understand them themselves. So I don't even bother selling them.
But I don't even know what I pay now because when
I think
was staff,
16,
what the staff pay?
16%.
Yeah,
I
16
think
or
15,
18.
15 or 16%.
What the staff pay?
I don't know. I don't know.
I can't even remember.
Them customers think
remember.
them customers think once $1,000 then use to buy put a new set of 1,000.
Oh, what?
They some loss. That's how I sell them. You better
So
explain than explain that credit card.
So they feel okay when they finish that, they ain't got to pay it back because
Right,
another 1,000 to end up there. Jesus. And with that, a lot of persons get credit card when they get those consumer loans, right? And not everybody should have a credit card. And like you say, they feel when they didn't pay off, now I could come back and another 1,000 sitting there instead of them paying it off. Because even if they make a payment of $50 a month, they don't absorb that $50 again. They don't take that back off, And so a credit card it's a line of credit. So and a lot of times we get money off it. We go to the ATM, we take off the card have 55,000, we take off 2,000 and then we don't pay it back. So what we don't and then the finance charge is so high. And that's another thing. Finance charges on these credit cards are very high. Overdraft, like we talked about overdraft before. Overdraft is an extension of credit where you can get a secured or unsecured overdraft facility. It's according to your relationship with the bank. So if you have a good relationship with the bank and they value you, they can give you an unsecured overdraft facility. Then you can also get a secured overdraft facility where, like I said before, you can put the equity in your house. So you have a mortgage, so they can give you an overdraft facility with your equity. Or you can secure it by a cash. So it's either one, cash secured, unsecured, or secured by a mortgage. Then we talk about protection products. Like protection products is like insurances. We have life insurances, health insurance, general insurance. We know life insurance is something that people take out. We can have term life insurance. A term life insurance, which can be just to cover your mortgage and the life term of your mortgage. So you take out a term life insurance, which will cover the lifetime of your mortgage. So, hey, I have a mortgage for 25 years, so I'll take out a term insurance for 25 years. My mortgage is 300,000. I take out a term insurance for, say, 300,000 to cover my mortgage. So once my mortgage is paid off, my insurance cease unless I have the one that I can renew. It's a renewable one that I can turn it into actual life insurance. But most people take a term insurance for their mortgages. And some people just take it out and say, okay, I can take it out until I'm take it out for 65 years. Okay, I'll do that. And by the time, I guess, hopefully I'll croak before the insurance croaks. So people do that. But like I say, mortgage insurance, life insurance, a lot of people take out term insurance for their mortgages because we have whole life insurance, we have variable insurance, endowment policies, different insurance that people take out where you get cash values and dividends. So people do that, and then people take out insurance for endowment insurance for like their children, especially when time for them to go off to college. So they take it out when they're very young. And so by the time they're ready to go to college, they can cash it in. That's a lot of cash values, and they can just cash it in and send their children off to school. Health insurance. Most persons who work are covered with health, and companies have health insurance. Some companies don't have health insurance. So you have to take out your own private insurance. And as we know, medical expenses are so high. And if you don't have medical insurance, you go to a doctor's hospital, they're looking for that money. You go to a PMH, you may get in if there's a bed there, but people people have medical insurance mostly with their companies. You'd be in a group life insurance. We have Atlantic Medical, we have FamGuard. It's several different Kalina, different insurances that you can take out health insurance. General insurance is like cover for household, building, contents, car, credit, and travel insurance, which people take out. But I know, like we talked about house insurance, and a lot of times people don't insure their contents. So we may have the house insured, but our contents isn't insured. So here again, it's good to insure the house and take a small coverage on your contents insurance, like your household, your furniture, your bed, your stuff like that. Then we have investment products, which I talk about in endowment insurance, which is also like a life insurance, which you, like I say, you take out really for most people do it for their children. You take it out when they're young, and so when they reach a certain age, you can actually cash it in and send them off to school, or if they don't want to go to school, sometimes the parents just take the money, or the parents give it to them to get them a start, with a house or something. Pension. Um, Most companies have pension. I've learned that not all companies have health insurance nor pension. I always thought all companies, I thought that was something you had to do, government requested you to do, but I'm learning that no, that's not a requirement by government to have companies to have pension or to have health insurance for their staff. So if it's not in your contract that the company is going to give you a stipend to pay your health insurance or a stipend towards your pension, well, you have to seek on your own to take out a pension fund with CFAL, Leno, RF, or Family Guardian, or Kalina. So yeah, pension funds is something too that you work hard. So at the end of the day, when you retire, most companies, if you put five, they put five, they match what you have. I don't know, some companies, some persons don't even have to contribute to their pension. You have voluntary or involuntary contribution. So some people don't have to contribute to their pension. The company pays everything, so they don't have to contribute to it. We have other products like foreign exchange, money transmission, or safety deposit box. We know foreign exchange is the purchase and the sales of currency or trade support for importers or exporters. Money transmission, checks, debit cards, national and international payments. Like most people we know use the different Omni services, Western Union, Sun Cash. We have a lot of cash and go to do wire transfers, like you receive and send money and pay bills, and you can do all of that with these companies. Safety deposit box. I don't know how much banks still have safety deposit box, but a lot of persons still use safety deposit box to secure their valuables. People put land paper, put jewelry, people even put money in their safety deposit box. Okay. Any questions, any concerns about what I just read? Hello, everybody gone to sleep?
But I have a question, right? So
Mhm,
let's say if I'm a customer that never had an account before,
mhm.
what is the best recommendation for a consumer to open an account with? Checking, personal, stuff like that.
Oh, would always be a savings account. A checking account is really for persons who have to pay a lot of bills or just prefer to pay bill. And see, like I said, a lot of times people open checking account and customer service reps don't inquire before they open a checking account for a customer by saying, what is the purpose of this account? Why do you need this account? And sometimes they just say, I just want to save. So why do you need a checking account? A savings account is quite fine for you. Yeah. So if you want to save, or I think it's better to have a savings account. And sometimes we have accounts just, we can open a regular savings account and use an account for savings, then open one just to use to pay bills. And because now online banking, you can do it from anywhere, any place, anytime, you can use your online banking to pay your bills. So, online banking is there. So I would say to persons who want to save and just to pay bills, I would use open two savings account, just use online banking to pay. Because remember now, when you write a check, each check you have to pay. And at the end of the month, you have check fees, you have different fees you have to pay, including government stamp tax. So for every check that you write, so I would say open a savings account. And if you want to say, I want something just to pay bills, you can open a savings account to save and a savings account to do all your online banking transfers to pay your bill. And a lot of times when you want a savings account, don't add, if you just want to save, don't add a debit card or add an ATM card to that savings that you actually want to save. Because even though you say you want to save, you'll be tempted sometimes. And if you're not a person who really disciplined, you'll go use that ATM card and take money off the account that you're trying to save. Or you could not attach that ATM card, that savings account to your ATM card, but that's left to you. People save for several reasons. People want to become financially independent. So you save because you want to one day not having to go to the bank to borrow anything because you have a good savings. And so you save for rainy days. You save just so you don't have to go to the bank, borrow their money, pay them interest. When you save enough, so you put a money in your savings account. Okay, people save for homes. People save to buy a home, and advice is the bottom line about it is, if you're saying, you say you're 22 or 25 or even 30, and you say, I need to purchase a home, you do your due diligence, you go out there, you look for the type of home that you would be comfortable with, not and which you can afford. A lot of times people want the big home, and that's their first home. You ever hear them say starter home? So a lot of times you could just get a starter home, but a lot of people don't want that. They want to start big from the get-go. So I would say savings, put a certain amount aside every month to say, this is towards me purchasing a piece of property, or purchasing a home, or building a home, or purchasing a repossess. Me today, I would say, before I buy a piece of property to build a house, I'm going to go look at those repossessed houses, because they have a lot of good repossessed houses where the land already there, the house already there. And they have a little fixer upper to do inside, but hey, I could knock the whole side inside out and part it off and do it the way I want. But I already got the property and I already got the shell. But a lot of people, because like I say, construction today, even the labor and the material is very expensive. So to me, if I was young like y'all and had to looking for a house, I would look for a repossessed house, and a good repossessed house, and that's what I would do. Because you could always talk to people down there. You want 50, you want 150. Yeah, this repossessed. How long your lot is on the market? That's what I did. And a lot of times people win their bid, you know. People save for retirement, like we talked about it before. You can't depend on national insurance, so you better save for retirement. And you're also young, and by the time you all reach the age of retirement, national insurance may not have no more money left for you all to get. I just want them to give me mine, but and if I having a hard time now.
That's not my money. I ain't gonna lie. Ain't too much of that. See, that's not my money.
You know, and now that this housing thing coming up, Mr. Ferguson, does national insurance contribute to funding for Bahamas Mortgage Corporation?
Hey, boy, that's a good question. That sounded over my head. I don't. I sound like politics and all grits. I don't. I can't.
Because I know before it used to say national insurance lend money to Ministry of Housing or lend money to Bahamas Mortgage Corporation years ago. Yeah, I remember that.
We already paid them back.
Y'all have paid them. Okay,
yeah,
I hope y'all don't have enough that y'all ain't have to borrow from them no more.
Boy, listen. Listen, that's another topic. You gotta get that over everyone head inside.
Yeah, because with this special our new Minister for Housing said she's spilling 1,600 houses. So that's a pretty penny.
Be appreciative, vigor, not determination.
That's a pretty penny. People save to get out of debt. When we say get out of debt, hey, I have these couple credit cards. Lord, I need to try save so I can pay off these credit cards. And like I say, a lot of times we want to save and we say we want to do things, but do we have a whiteboard? Do we have a whiteboard where we sit down and we say, okay, hey, I want to pay off Scotiabank credit card. I want to pay off Commonwealth Bank credit card. I want to pay off Fidelity credit card. Do we have a whiteboard and we put a time limit on these, on paying off these loans? But we don't. We say we want to do things, but in order to make things happen, we need to see it. We need to put it on a whiteboard. And as we do them, we mark them off. We set goals like, say 2022, these are my goals. You know, a lot of times people set goals, say, I want to lose weight. But what progress? What are they doing towards losing weight? They still eating plenty. They're exercising. But 2022 resolution, I want to lose weight. Like with anything, we want to see something happen. We have to put it down. So like I say, with a credit card, I want to pay off these 3 credit cards. So what I do, I get a whiteboard, I put it where I can see it, and I say, okay, I want to pay off Scotia, Commonwealth, Fidelity. When I finish paying off Scotia, I mark that off. Commonwealth, I mark that off. Fidelity, I mark it off. So even if in 2022, only 3 goals I've achieved something because I made the start and I put down what I want. I saw it. I see what I want to do, not just talk it. How many of you use a whiteboard to say the things you want to achieve in 2022 or you wanted to achieve in 2021? How many of you have done that?
Well, I have
I actually,
of what
I
I
don't
wanted
use
to.
a board. Go ahead, Big
I
Stuff.
use a book.
Pardon me?
I don't use a board actually. I have like a little note on my dresser on the stuff that I want to achieve, and as I do them, I just squash them out. But I put them there because I have to get ready for work every morning, and so I always look it in the mirror. So every morning I will see, I'm reminded that listen, you have to do this, you have to get this one done, you have to get that one done.
Okay.
And then I just cross them out.
Okay. Yeah. But like I say, a whiteboard is good. Yeah. It's good to have that. I have a son who lives in the US. I've learned that from him. He would have goals and he said, okay, this is my goal. I'm getting my master's. I'm doing this. I'm becoming a US citizen. I'm doing this. I'm getting a house. I'm doing this. And, you know, he would scotch them off as he do them. And so he said, Mommy, get a whiteboard that you could see. And he has that right over his desk. So he sees that every time, because he's working from home, every time he sits at his computer. So it's good to be able, like you said, Ms. Strawn, to see it every day. So it reminds you what are your goals, what you want to achieve. And that's a lot of times a lot of people don't achieve the things they want because they don't put them down. We just think about it and we say it, but we don't write it down to say, so we can put things in place to have it done. I want to pay off Commonwealth Bank credit card. My credit card balance is $1,000. I put aside $200 every month. Every month, pay it off. Pay it off. Don't use it. Cut it up. Throw it away. Just paying it off, not using it. Then you can have a credit card at a Scotia, and you say, hey, my credit card limit is, hey, 5,000. Hey, I need to decrease that. So you pay off the 5,000. You say to the bank, give me a $2,000 limit. Not doing that. And so the money that you was actually paying all the time, you can take some of that and put it in a savings for your retirement, you know. Annual expenses, like we know with annual expenses, we have, like I said before, we have house insurance, mortgages, all of these expenses. If you want to have a good, relatively stress-free financial life, you need to save for annual expenses. These may include money for gifts, vacation, vehicle, maintenance, minor home repairs, fixing appliance, property tax, and possible income tax. It can be tempting to refinance a mortgage to pay off debt or to use a line of credit to pay off high interest credit card, but it is dangerous to endlessly put expenses on credit card without actually paying them off. The best way to manage these types of expenses is to save for them in advance. This will only save you money. This will not only save you money, but will give you a peace of mind. So they tell you, if you do all of that, you save, then you don't gotta worry about, oh God, I going on this vacation, Lord, we ain't have enough money. Oh, let me go try Commonwealth Bank. What that is, money for vacation, which you don't really need to go on because you can find things to do right here. But you know, we gotta jump on the plane to go to Walmart to shop. So unforeseen, we didn't need to do it, but that's what we want. So once we try to save, we for annual expenses like they say, maintenance of your vehicle, house insurance, you have real property tax, you have income tax. Do y'all feel at any point in time income tax we will be getting hit with income tax soon?
If they exchange it for VAT?
Well, like I say, what you mean exchange it for what? You think they could take clothes VAT down? Never.
That was a topic of discussion. Should it be income tax or VAT initially?
Don't take, well, that's your, I retire, they can't take my money. I retire. You know, when coming up my money, I retire and give them all my money. For y'all who have to pay income tax. I can have to pay VAT. Y'all have to pay the income tax. Anyway, I think I did all the reading, which I promised not to do today, but I did. So y'all could continue to, when y'all come to class for, not the next class is exam. So the following class, please be completed with reading, finishing chapter 6, because we're gonna move on to chapter 7. Only if you have questions and concerns relating chapter 6, we can discuss them before we go on to chapter 7. Okay? Any questions? Any concerns? And like I say, you have the review sheet. So review and all the best. Midterm is worth 35%. So make sure y'all ready for that midterm next week.
Good
Okay?
evening, Ms. Smith. You didn't
Hi.
send mine back as yet so that I can know exactly what I need to work on.
What is that? Which one is that?
The quiz and the I think the assignment.
Oh, the quiz, I just, believe it or not, I just got your quiz to Miss Dean today, and I had to call her. I say, hey, wait, that quiz. You and Mr. Ferguson, eh?
I think so.
Yes, ma'am. I had technical difficulties with my laptop
Yeah,
last week.
yeah, I will have them for y'all tomorrow. Yeah.
Thank
I'll
you.
try to get up tonight to mark them and have them for y'all tomorrow. Yeah. Okay. But you
Okay,
got the
thank you.
review sheet, right?
Yes, ma'am. I have the review sheet.
Okay. Yeah. But I'll have them for both of you tomorrow. But she sent them to me today. Yeah. All righty. Good night.
Good night.
Good night.
Bye.
Good night. Good night.
All righty.